The current price for NUBURU Inc. stock is $0.24 per share, reflecting a 5.26% increase as of the market close on May 11, 2026. While the prod market often views penny stocks in the defense sector as high-risk gambles that burn through cash faster than they can innovate, the reality under the hood at NUBURU suggests a massive structural pivot that the casual observer is likely missing. Most people looking at this ticker see a company that recently had to execute a reverse stock split just to keep its listing on the NYSE American. But if you look at the actual contract flow from the last few weeks, you will find a business that has successfully transitioned from a pure-play laser manufacturer into a dual-use defense and security platform with a footprint stretching from Italy to Ukraine. Expectations suggest that a company with a market cap this small should be struggling for relevance, but the reality is that NUBURU just secured a $250,000 deployment order for a portable laser dazzler system from a Tier 1 government defense organization in the Asia-Pacific region. This is not just a one-off sale, it is an entry point into a global counter-drone market estimated to be worth over $20 billion. While retail investors are busy checking their Robinhood app for the next meme spike, NUBURU has been quietly integrating with Tekne SPA and engineering bureau BURU to launch Phase 1 of a defense program in Ukraine that is projected to bring in between $5.75 million and $11.5 million over the next year. When you look at the general narrative around NUBURU stock, it is often one of skepticism due to past financial pressures. However, the recent $12 million public offering and the subsequent restructuring of preferred equity liabilities have fundamentally changed the balance sheet. They have cleared out $8.4 million in debt, and for the first time in years, the path to positive shareholders' equity by the second quarter of 2026 looks realistic rather than aspirational. This is where the tension between expectation and reality becomes profitable for the disciplined investor. While many are waiting for the safety of a blue-chip name like Nvidia stock or Apple stock, the real movement is happening in these micro-cap defense pivots where the market has not yet priced in the transition from development stage to active defense contractor. The recent trading volume and institutional interest suggest that some are starting to take notice of the Liacon subsidiary. This Italian unit is the heart of their blue laser business and is now being selected by semiconductor companies for surface treatment applications. This dual-use capability, serving both the high-precision needs of the tech industry and the rugged demands of the defense sector, is a rare hedge. If you are using investing sites to screen for growth, you might see the going concern qualification in their 2025 filings and turn away. But the contrarian take is that these warnings are lagging indicators. The leading indicators are the 40 high-power laser systems currently in production for Dutch agritech firms and the active manufacturing joint venture with Maddox Defense in Houston. Institutional activity in this sector often follows a predictable pattern of wait and see, but the strategic equity position NUBURU recently took in Heckler & Koch AG shows a level of aggression you do not see from a company that plans on fading away. They are not just selling lasers, they are building an integrated ecosystem of non-kinetic defense effects. For those managing their own self-investing through a Fidelity brokerage or an individual brokerage account, the question is whether the current 24-cent price point represents the bottom of a successful turnaround or a temporary bounce. Comment below how many shares of NUBURU you currently hold, or if you are waiting for the Tekne acquisition to be fully approved by the Italian government before buying. The business model here is shifting towards software-orchestrated defense systems. By acquiring Orbit and its SaaS resilience platform, NUBURU is adding a recurring revenue layer to its hardware sales. This is a move straight out of the big tech playbook, yet it is being executed at a valuation that is a fraction of its peers. Most investors looking for investment help are told to stick to diversified Fidelity ETFs or Fidelity mutual funds for stability, and for 90% of people, that is the right move. But for the small percentage of traders who use interactive brokers or the Robinhood trading platform to hunt for asymmetric risk-to-reward ratios, NUBURU is presenting a case study in industrial reactivation. Let's talk about the specific catalyst for the rest of 2026. The biggest one is the Golden Power authorization from the Italian government. This is the final regulatory hurdle for NUBURU to take a 70% controlling interest in Tekne. If that goes through, they are effectively acquiring a company targeting $57 million in revenue for 2026. Compare that to NUBURU's current market cap and the math starts to look very interesting. This is the kind of insight that moves the needle. While the crowd is debating the daily swings of Tesla stock, the real value is being built in the supply chains of modern electronic warfare and directed energy weapons. Even with the Robinhood fractional shares or the ease of a Fidelity mobile app, small-cap investing requires a level of scrutiny that goes beyond the headlines. The reality is that NUBURU is operating in a high-stakes environment where hardware must work perfectly every time. Their new roadmap for 500-watt blue laser architecture is designed to challenge the traditional infrared lasers used in defense. Blue light has better absorption rates in metals like copper and aluminum, making it far more efficient for destroying drones or conducting precision manufacturing. This technological edge is why they're winning orders in the Asia-Pacific market while their competitors are still in the prototype phase. If you are using a SoFi Robo-Advisor or Schwab Intelligent portfolios, you probably won't find NUBURU in your automated basket because it is too volatile for standard algorithms. That is exactly why it remains an active investing play.
The management team has been incredibly transparent in their shareholder letters about the liquidity pressures, but they have also shown a disciplined execution in their production ramps. They are moving from 100-watt to 200-watt configurations with modular scalability, which is a fancy way of saying they can build these systems faster and cheaper than they could 2 years ago. The macroeconomic pressures of 2026, specifically the increased defense spending across NATO and its allies, provide a massive tailwind for NUBURU. Their joint venture with Maddox Defense is specifically designed to meet U.S. government manufacturing requirements, ensuring that they aren't just an overseas company but a domestic player in the $20 billion counter-drone space. When you analyze the sector momentum, directed energy is no longer a science fiction concept. It is a tactical necessity on the modern battlefield. NUBURU is one of the few ways to play this trend at a ground floor valuation. For those of you using online investing platforms to build a portfolio, it is easy to get distracted by the high-flying chips like Nvidia stock. But the real story of 2026 might be the industrialization of like. NUBURU is at the center of that, proving that blue lasers are not just for research labs, they are for the factory floor and the defense perimeter. The expectation was that they would fail to meet NYSE listing standards and be delisted. The reality was a successful reverse split, a massive capital raise, and a string of international contract wins that have kept them in the game. As we look toward the final quarter of the year, the risk remains the going concern status and the need for consistent revenue realization. However, with the Ukraine programs moving into Phase 1 and the agritech deliveries already in motion, the revenue pipeline of over $6 million is a solid foundation. If they can hit their goal of positive shareholders' equity in the next few months, the institutional narrative will shift from survival to growth. This is a classic example where the market's memory of past failure creates an opportunity to buy into a restructured future. In summary, NUBURU is no longer the struggling laser startup it was a year ago. It is an emerging defense platform that has successfully navigated a brutal financial restructuring. The contrast between the public perception of a 24-cent penny stock and the reality of a company with multi-million-dollar defense contracts and a strategic stake in Heckler & Koch is where the opportunity lies. Whether you use the Robinhood app, a Fidelity IRA, or the Interactive Brokers platform, this is a ticker that demands a deeper look beyond the surface-level price action. We have seen how the expectations of a delisting were met with the reality of a global expansion, and as they continue to execute on their directed energy roadmap, that gap may close sooner than the bears expect. Manage your authority in the market by looking at the billings and the order book, not just the daily candle. NUBURU is proving that even in a sector dominated by giants, a specialized technology provider can carve out a massive niche if they have the right industrial partnerships. Stay sharp, keep your eye on the Italian regulatory approvals, and watch for the next production ramp update.